Whether you're a seasoned real estate investor or a first-time homebuyer, Rancho Capital knows what it's like to apply for a mortgage, and we strive to never forget that feeling. We are a highly knowledgeable group of mortgage professionals who pride ourselves on top-notch communication. We are dedicated to educating you on the mortgage process. Please enjoy this video. FHA is a popular home loan program that is often used by first-time homebuyers. Knowing the requirements and benefits is important when you're considering it as a home loan. In this video, we're going to cover the basics of the FHA home loan program. Let's begin with understanding what is an FHA loan. An FHA loan is a mortgage made by an FHA-approved lender and insured by the Federal Housing Administration. Borrowers can purchase a home with lower credit score qualifications and down payments than conventional guidelines allow. FHA loans aren't just for first-time homebuyers. You can be approved regardless of whether you currently have or have previously owned a home. The Federal Housing Administration was created in 1934 to give renters in the U.S. better loan options for buying a home. Back then, you typically needed a 50% down payment and enough income to pay the loan off in 3 to 5 years. Over time, the FHA loan program guidelines allowed borrowers to make a down payment as low as 3.5% and pay off the loan over a 30-year term. Lenders were and still are willing to take the risk of making FHA loans because of the mortgage insurance premiums borrowers pay to protect them against financial losses if they default. FHA loans essentially work the same as other home loan programs. You need to qualify based on your income, credit history, employment history, and verify you have or can get a gift for the down payment and closing costs. However, the flexibility of FHA loans may work best if your credit score is between a 500 and a 619. If your total debt to income, or DTI ratio, which is a measure of your total debt compared to your income, is higher than the 50% conventional DTI ratio maximum. If you need a loan amount at or below the current FHA loan limit in the county you're buying in. If you want to buy and live in a 2 to 4 unit multifamily home with a 3.5% down payment and use rental income to help you qualify. If you want to buy a fixer-upper home with a 3.5% down payment and roll the renovation costs into your loan amount. If you need to qualify for a mortgage with the income of a co-borrower who won't live in the home. If you've had a bankruptcy in the past 2 or more years, or if you've had a foreclosure in the past 3 or more years. And finally, you will want to look at the flexibility of an FHA loan if you cannot qualify for a conventional loan. It's important to understand how FHA loan mortgage insurance works. So FHA borrowers have to pay 2 types of FHA mortgage insurance to protect FHA-approved lenders from the financial risk of defaults. The first is an upfront mortgage insurance premium, or UFMIP, of 1.75% of your loan amount, which is charged at closing and typically added to your mortgage balance. The second is an ongoing annual mortgage insurance premium, or MIP, that ranges from 0.45% to 1.05% depending on your down payment and loan term. It's charged annually and divided by 12, and then added to your monthly payment. There are some important differences between FHA mortgage insurance and conventional private mortgage insurance, or PMI. You'll typically pay FHA MIP for the life of your loan. This is true if you make a minimum FHA 3.5% down payment. However, if you can make at least a 10% down payment, MIP drops off after 11 years. You can get rid of conventional PMI, or private mortgage insurance, once you can prove you have 20% equity. Your credit score doesn't impact your premium. Unlike private mortgage insurance, FHA mortgage insurance premiums are the same regardless of your credit score, which could result in a lower monthly payment than a conventional loan. So what are the advantages of an FHA loan? Some of the biggest benefits of an FHA loan include qualifying with a credit score as low as 500, a low down payment, a DTI ratio above 50%, and the flexibility to add a co-borrower's income to get approved even if the person won't live in the home. You'll want to check with your lender to find out about their specific guidelines. So make sure you're working with a state licensed mortgage professional and get your questions answered. The FHA loan could be the perfect program for you to get into the home of your dreams. Thanks for watching. We are here to answer your questions and help you through the process. We're excited for the opportunity to earn your trust by offering the right mortgage for your unique financial scenario. You can reach us online at www.myranchocapital.com. We look forward to working with you.